Okay, here we go. It is Sunday evening weekend market update. We skipped last week, had a lot going on, and so we are back. We're back with Bitcoin. We're back with, I'm going to do ETH gold because I think there's a bit of signal there. We're going to do USDT. We're going to do SPX denominated in M2, and we're going to call it a day, folks. That's what we're going to do. I've got a monthly chart up of Bitcoin, and the monthly is telling us some stories as well. So far, we've been consolidating here for what, 4 months now, in this region above 106K in essence. We can observe these candle bodies on a monthly and listen to the story that it's telling us. And there's a story it's telling us, by the way. And it's that the path of greatest pain continues to be up. And the lack of appreciation for where we are in the scope of the largest reaccumulation in Bitcoin's history, I think is going to be met with continued disbelief and skepticism and flip-flopping as we continue to see all the way up. I mean, we've seen it all the way up from these levels. It's the same story, the same accounts getting bullish and bearish and bullish and bearish with volatility. And the place where you'd expect most to kind of agree on something is where we are now, but that's not the case, which is, in my opinion, again, I'm not a financial advisor. You all know that. Don't take what I'm saying as financial advice. Do your own research. So always the things I talk about could go up, could go down, could go sideways. But well, the point being is if you're long this market right now, if you're long and letting the market do its work, you're probably in the best position versus trying to, and then this kind of goes for anything, trying to, observe local price action to inform, what you should do. That just doesn't work. At least that's my opinion. And so I'm getting off on a little bit of a tangent here. So what I wanted to say is this. In every multi-month correction, first off, the bias is this thing is continuing up, and it has been since that was established. This is an uptrend that is not up for debate. There's no debate. That's an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. There's no debate there. And so the bias needs to be continuation in the direction of the trend. Now, when have we, on a monthly basis, when has the market, in the market's DNA, told us to potentially expect more corrective phase before resumption? Well, it's right here in the charts. It's a bearish engulfing on a monthly basis. After this first impulse from November 2022 to April 2023, you had your first bearish engulfing candle show up. And what did that then produce? From May all the way through September, we had a flat correction. When did that happen next? That happened after the following impulse. That's not what I wanted to use. The following impulse from September that went all the way to March of 2024. We had what? After that, a bearish engulfing, which led to 1, 2, 3, 4, 5, 6 months of, it wasn't a flat correction. This was a zigzag, okay? Correction that happened to come at a major sign of strength region. I don't know why that does that. It's annoying. Sign of strength region after this massive reaccumulation. When did it happen after that? It happened in February 2025. We had a bearish engulfing that led to another 1, 2, 3 months before we got back up over in May of 2025 over the previous high in January of 2025. And where are we now? Are we observing any of that? No, we're not actually. We're not, because we had a red month in August. It wasn't engulfing. We closed inside the body of the previous month's candle. And so there's no evidence. There's no evidence in the DNA of this macro impulse that we should be expecting anything other than, once this move is resolved, continuation. And we should be expecting the continuation to be the steepest part of the continuation rally to date, given the proximity of this entire structure as it relates to its reaccumulation base. So this was consolidative. The largest impulse so far was here, 4 to 6 months. This was a smaller one. My expectation here is for this to be the largest one. Okay, why? Because we're in the expansive phase. And so that continues to be what I think is coming next. And I know I've been saying that for some weeks, but you know what isn't happening? What? We aren't gaining any acceptance here. We haven't broken any structure. We're consolidating at all-time highs. The markets are at all-time highs. We're at $113,000, $114,000 Bitcoin. So nothing is happening. We're just consolidating. And so that's it. That's Bitcoin. ETH Gold is giving us some signals on a weekly. I've said once we got up to here on ETH, I was expecting an ABC correction. We got it. When we denominate ETH in gold, what do we observe? We observe a 618 retracement of this entire impulse, reclaim of the 30, wicks below the 30, weak simple moving average, and staying in the cloud. Okay. The presumption here has to be continuation. No breach of the 30, no breach of the 618, no breach of the cloud. The assumption here for me is this was the first impulse in what's going to be a 5-wave impulsive move to the upside. And so that's what I think is coming next. And these are pretty clean fibs. These are pretty clean, this pretty clean respect of key moving averages in the cloud on a weekly chart. And so that has my attention. So that's another point for this correction being either complete or almost complete. USDT tells us the same story, same story. I've shown this chart many times, and up here was saying this is all distributive. That is all distributive, okay? That action, just distribution fell out of this, and what did it do? Hit the top, can't even hit the top, and now we're making a lower high. That's all bearish. This is all consolidating to a last point of supply, the supply being the floor here, okay? And just making lower highs in a, what? Impulsive fashion, corrective fashion, corrective fashion, corrective fashion, corrective fashion, corrective fashion. A, B, C, D, E for a B wave. And so why do I say the next 4 to 6 months are going to be impulsive? Because the A wave coming into this entire move down on USDT occurred from September of 2023 to March of 2024. That in essence is what? Your 6-month rally. And so what's to follow, in my opinion, mimics the A wave because I'm looking for a C wave. Impulsive to the downside in 5-wave moves. Much like we saw A, B, C, D, E triangle, okay, on the way up into the distributive phase, we're going to kind of see, in my opinion, the opposite of that on the downside, which, again, another point in the direction of fierce continuation. What's another point that gives us more confluence in terms of what we're talking about and everything that we're looking at? That's SPX denominated in M2. What did I say since we hit the bottom here in April? I said I'm expecting a slingshot. I'm expecting high velocity. I'm expecting it to continue going further than people think it's going to go. And what is this? This is one of the fastest, quickest percentage gains in time that we've ever seen, only mimicked by what we saw back in the .com era. We've now passed the 1272 extension, which is a common for a flat, so a B wave. If this was going to be some type of A, B, it generally wouldn't. You can't assign rules and say never because Elliott wave rules are busted a lot. But the point being is if this was going to be some type of B wave flat and make a C and then go, you would generally not see it exceed the 1272 extension. We're exceeding that this month. So far, the month isn't over. My expectation is the next stop is the 1618. My expectation is this energy to continue to release itself to the upside, and that produces a rally against M2 of another 6-7%, probably in November, December, probably that quick. So, folks, markets are looking fantastic. That's all I have to say for this video. Hope you have a great rest of your weekend and take care.